Hi friends, this is Kishore. Welcome back to my channel. Today I would like to cover market index analysis, gold price forecast, sector analysis, Santa Claus rally, 4-year presidential election cycle, and economic calendar. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. The fear and greed index it came to extreme greed after 8 weeks of rally, continuous rally. Market sentiment came to the extreme greed. We know last week it is in the greed, and the daily heat map most of them are green except Nike. Nike was down more than 11% because of the bad result and bad guidance for the next quarter. And this is weekly heat map. Most of them are green, especially Google and Meta. They performed really well, more than 5% up. And weekly heat map for the ETFs, we can clearly see here the China ETFs are down. Still, China is struggling to rise, especially FXI, MCH, and WAN. And this weekly sector performance, most of them are green except utilities. Utilities down more than near to 1%, and communication services more than up 2%. And this is economic calendar last week results. Housing starts came more than expected, like they are expecting 1.36 million, but it came 1.56. Building permits were down 1.48 is expected, but it came down 1.46. This will hit the supply side, and it will hit the prices go up. And the existing home sales, it was more than the expected, like 3.76 expected, but 3.8 is the million is the actual result. So existing home sales really good. Consumer confidence, it came down, it came as 110, expected is 101. This is one of the index data point is used for the recession side. So it tells there is maybe a soft landing or there is a no recession. And on Thursday, initial jobless claims came 205k, but expected is 215k. But they did not bother the market is upside or the downside. The GDP version came down. Expected is 5.1, but it came down to 4.9. But it's okay. This is also not hit the market that much. And US leading economic indicator, it came as expected minus 0.5. This is one of the indicators used to find whether it is a soft landing or the hard landing side. It came as expected, so there is will be a soft landing only. And the PCE index came on the Friday. It was a really boost to the market. It came minus 0.1, and this was one of the main index report is followed with the Fed to raise the interest rate hike or pause or cut. And finally, new home sales, it came down like 590k, but the expected is 688k. So the existing home sales came more than expected, and the new home sales came down more than expected. So both are mixed, and we'll see like how the housing sector performance in the next year. And this is this week, coming week, economic calendar. This week on Tuesday, S&P Case-Shiller Home Price Index come, and also consumer confidence. And both are really important. The S&P Case-Shiller Home Price Index is important for the housing stocks. And also on Thursday, we have initial jobless claims and pending home sales. And pending home sales are really important how it is going to be, because we know the first 6 months of the year is good for the home sales, and we'll see like how it is going to be in the December. And this is sector performance year till date from Jan to the December till date, and you can clearly see the defensive sectors are down, like utility, staples, energy, and healthcare. All four are defensive sectors. All defensive sectors are down, but if you see at the communication services, discretionary, and technology, they performed really well this year. So more than 40% is a good sign. And real estate is 11%. It was done a lot in the till October, but it bounced really good, and it came down to the 11%. And also the financials, it was also done a lot, and from October it bounced like anything, and right now it's 11%. And this is various industries in the S&P. So you can clearly see here the down was the solar, clean energy, regional banks index, and also the oil supply, oil services, and the oil and real estate REITs. So these are all down, not performed really well in this year. But semiconductors, home builders, software, and XME, they performed really well this year. So there may be chance the solar and regional banks and the oil sector, they may perform well in the next year. And this is 4-year presidential election cycle. So the dotted line is the pattern, and the solid line is the current index. So right now we are here. So this is the end of the third year, and the fourth year starts here. So in the fourth year, the Nasdaq, it looks like really good. Even though the compared to the S&P and Dow Jones, they are performing well, but Nasdaq is the leading one. And this is Santa Claus rally, based on the L. Hirsch. He is the one who first coined the term Santa Claus rally. And the Santa Claus rally is the last 5 trading days of the December and the first 2 trading days of the January. So it starts on last Friday and it ends on the January 3rd. If it is bullish, it ends more than 1% or like that, then that that gives one of the indication next year is going to be bullish. So there are three indicators to know whether the year is going to be bullish or bearish. So one is the Santa Claus rally, and another one is the first paid trading days of the January, and the third is the January barometer. It says like how January goes, the year goes. So if the January ends green, then the year also ends green. So these are the three indicators we need to follow. We need to see how it is going to be. The first one is the Santa Claus rally. Hope it will be green. And this is TLT. TLT struggled this week. It hit the resistance at 100 and came down to the 98.48. So, and the CSI is a little bit overbought region, but even though it is a red candle, reversal candle, the volume is low. So there is a chance it can go up, but right now there is, it can go sideways. My support is 97 and 93, and the resistance is 100. And this TNX also hit the lower band of the Bollinger Bands, and it's a oversold region. So it may go up a little bit. So, but these things are depending upon how the bonds perform. I'm a little bit paused on the bond side, so yields can go down and further. And this is crude oil. Crude oil is a weekly chart. It bounced perfectly at the Bollinger Band lower band, and the CSI also curling up. So I'm a little bit bullish on the crude side. So resistance is 77 and the support is 70. And the DXY, it's a US dollar index. So this week it came down from 102.5 to the 101.7. This is really added as a tailwind to the market. So it can still further go down. So I'm expecting like 105 or 101 is the support and 102 is the resistance. And this is gold. So weekly chart. So this week performed really well. So my support is at 1900 and the resistance is 2250 and 2400. I'm bullish on the gold side. I will show you why. And this is the CFTC report. So the Commodity Futures Trading Community releases every week a report. So it's a short-term short report. So in this, I'll look at this managed money, whether they are long or short. So the long is 155, more than 155K, and the short side is 47K. So I'll take this as the short-term trend, how they're expecting. So if they are more on the long side means they are bullish. If they are more on the short side means they are bearish. So based on the report, I'm looking it is bullish. And the gold seasonality, if you see here from the mid of, the blue line is the 5-year average and the green line is the 10-year average. So if you see here from mid of the December to the end of the February, so gold is seasonally is bullish. So based on this commodity report and the seasonality in the chart, I'm a little bit bullish on the gold side. And this is a put call ratio. Last week we thought it's at 0.70. It hit the July lows. So if it goes down, then it's a good chance to buy and take some put positions, because if it is overgreed, extreme greed means there is a chance the market can come down. So, but this week it bounced a little bit, but the market goes sideways. But the number of puts put call ratio jumped up. So it tells like the big guys may bought some puts. So, and this is number of stocks about 20-day moving average in the S&P 500. So in the below I put the overlaid with the SPY chart. From this blue line, it goes to the side in the sideways, but the market is going up. It happened similarly here also when it is going sideways, but the market is going up. At certain point of time, market take it down. Here also the same, from the blue line to the red line, it went up. From there, it went down. So right now we are going sideways. Market is going up. So one day or 1 week it may take the turn, but we need to wait and see when it will go down. And this is SPY daily chart. So last 7 days, it is digesting the last 7 weeks rally. Because we can see here literally there are 3 gaps here and rallied like anything last 7 weeks. So this week it went sideways and digested the whole rally. So the blue line, it's a weekly chart. You can see that the blue line is the all-time high. So if this Santa rally happens, then it may hit the 480 or the support at the 468 levels. And this QQQ daily chart, again, this week it's just going the sideways and digesting this last 7 weeks rally. And my support is at 403 and rest is 413 level. And the IWM, so it came to the resistance level and it's a little bit overbought region, but the volume is going up, still going up. So I'm still bullish on the IWM side. So my resistance is 209 and support is 196. And finally, the market summary is market is digesting last 7 weeks rally. It can break on either side. So based on the put call ratio or the number of days, 20-day moving average, the number of stocks in the SPY 20-day moving average, based on the indicator, we are a little bit overbought. So there may be chance of some pullback. All eyes are on Santa Claus rally. As I said earlier, there are 3 indicators many people follow to see the next year is bullish or not. The first one is Santa Claus rally. So everyone are looking at how it will be, the Santa Claus it would be. And energy, REITs and oil sectors are ready to bounce. So as I said earlier, the oil is at the bounce level. So I'm expecting energy, REIT and oil sectors may bounce soon. And the gold short-term trend is bullish. As per the chart, gold chart, price chart, and also the commodity trading report, and also seasonality. Based on that, I'm a little bit bullish on the gold side. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of your friends looking similar kind of content. Please hit the bell icon so that you'll get notification when I upload a new video. Thank you so much. Bye bye.